Good morning, everyone. This is Charalambos Pissouros, senior analyst at IronFX, bringing you the morning comment for the 7th of July. FOMC minutes, nothing too surprising. The minutes from the June FOMC policy meeting confirmed that the UK referendum could delay the committee's hiking plans, but did not provide too much new information to market participants. Most FOMC officials were concerned about the softness of the May employment report, but were reluctant to change their outlook materially based only on a single data point, and preferred to wait for fresh figures to provide clarity on the matter. Overall, the combination of signs of weakness in the labour market and the potential consequences of Britain's referendum on the US economy are likely to keep the Fed on hold for some time. According to the Fed Fund futures, the market is now pricing in the next Fed rate hike in January 2019. Given that the Brexit vote has so far not caused the market turmoil that many expected, we maintain the view that investors may currently be too pessimistic about the timing of the next hike. If we were to see a rebound in the upcoming NFP figures, combined with signs of stronger GDP growth and financial calmness, speculation for a near-term hike could resurface. Conditional upon this, September and December would still be live meetings, but we assign a much higher probability to a potential hike in December, given that the 2.5 months left until September's meeting may not be enough time for the committee to conclude that the US remained unaffected by Britain's decision. As for today's events, during the European Day, the ECB will publish the minutes of its June monetary policy meeting, where the bank remained on hold. Even though these are usually not a major market mover, following Britain's vote to leave the EU, they may attract some unusual attention. We believe that investors may focus primarily on a discussion over what instruments are likely to be used in case of a Brexit affects Eurozone. In the UK, the Conservative Party MPs will continue with the second round of voting on who will succeed Cameron as their party leader and thereby new Prime Minister. Given that the candidates are now down to 3, the vote today will indicate which 2 will be on the final ballot, with the winner expected to be announced by mid-September. The fact that the 2 final candidates will be known as early as today could ease some of the concerns over the UK's current leadership vacuum and thereby may alleviate some political uncertainty. In the US, the ADP employment report for June is due out, just 1 day ahead of the non-farm payrolls. The print is expected at 159K, down from 173K in May. Even though this is a relatively low print compared to the first quarter of the year, Fed officials have stated that as the labour market approaches full employment, payroll numbers even as low as 100K could still point to tightening labour market conditions. As a result, if the ADP figure meets the forecast, this could still prove positive for the dollar. However, given that the last ADP number was nowhere close to the NFP, we believe that investors may take the ADP report with a grain of salt this time. Initial jobless claims for the week ended on the 1st of July are also due out. From Canada, we get the IV PMI for June, and expectations are for the index to have crossed above the critical 50 line, something that may support the loonie on the release. The nation's building permits for May are expected to have risen as well. We have 2 speakers scheduled for today, ECB Vice President Vitor Constancio and ECB Executive Board member Sabine Laudenschläger. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, senior analyst at IronFX, wishing you solid trading.